The smart way to fund your real estate empire without touching personal cash-building business credit is a game-changer for real estate investors. By separating your personal assets from your business, you can unlock financial flexibility and use business credit to fund property deals without dipping into your personal funds. Here's a step-by-step guide to building business credit through real estate. Step 1. Set up an LLC or corporation. Before you can start building business credit, your business needs to be recognized as a separate entity. Establish a limited liability company, LLC, or corporation, S Corp, or C Corp. These structures protect your personal assets and help establish business credit. Start by registering your business with your state and filing the necessary paperwork, which typically costs between $50 to $500 depending on where you are. Once your business is registered, obtain an Employer Identification Number, EIN, from the IRS. This acts as your business's social security number and is essential for tax purposes. After that, open a business bank account. This is crucial for keeping personal and business finances separate, which lenders and credit bureaus will verify to ensure your business is legitimate. Step 2. Establish vendor accounts. The next step is to establish Net 30 vendor accounts, companies that offer you 30 days to pay your invoices. These vendors report your payment history to business credit bureaus like Dun & Bradstreet, Experian Business, and Equifax Business, helping to build your business credit profile. Start with companies like Uline, Quill, and Granger, vendors that provide supplies to businesses. By purchasing items and paying on time, you begin to build a strong payment history. Aim to establish at least 3 to 5 trade lines that report to Dun & Bradstreet to generate a Paydex score. A Paydex score of 80 or higher shows that your business pays its bills on time, which is crucial for building credit. Many small businesses don't even realize they have a business credit score, so getting this step right is important for future growth. Step 3. Open Tier 2 accounts. Once your business credit profile is established and your Paydex score is strong, it's time to level up to Tier 2 accounts. These accounts typically include business gas cards, store credit lines, and business credit cards. These accounts offer higher credit limits and don't require a personal guarantee if your business credit is strong enough. Consider applying for business credit cards from companies like Capital One or American Express, or store cards from Home Depot, Lowe's, and Best Buy. These lines of credit give you the ability to purchase materials, pay for services, and manage cash flow, all without using personal credit. The key is to use them wisely. Keep your balances low, make payments on time, and avoid racking up unnecessary debt. These cards can be used for real estate expenses like renovations, office supplies, marketing campaigns, and travel costs related to property searches. Step 4. Use it for real estate. Now that your business credit is in place, it's time to put it to work for your real estate business. Use your credit to fund property-related expenses without using your personal funds. For example, you can use business credit to pay for renovations, buying construction materials, or staging properties. You can also use it to cover marketing expenses like ads and flyers to attract buyers or sellers, or travel costs for site visits and property inspections. Imagine using your business credit to purchase $5,000 worth of materials from Home Depot for a flip, then selling the property for a $30,000 profit. You've used business credit to fund your renovation and never touched your personal savings. Just be sure to pay off the credit line on time to avoid interest charges and keep your credit score intact. Final thought: business credit gives you flexibility and freedom. Build it wisely. Use it strategically. Building business credit isn't just about accessing money for real estate. It's about creating financial flexibility and long-term growth. When used strategically, business credit allows you to scale your real estate operations, invest in more properties, and reduce reliance on personal finances. The key to success lies in building your credit profile slowly and responsibly. Start small, make timely payments, and use your business credit to fuel your growth. Over time, your business credit will open doors to larger opportunities and better financing options. By using your business credit for real estate purchases and expenses, you set yourself up for greater success while protecting your personal financial health. If you enjoyed this video, make sure to subscribe to this channel for more content. Thank you.